New Zealand dollar on the 60. I'm involved in a triangle. I'm going to go ahead here and do the higher time frame analysis and talk through this. I haven't got the risk to reward that I wanted. We saw a big rally at the close of the 4-hourly candle, but here on the dailies, this is confirmation as well. What I'm looking at, what we'd been doing here, we'd been trending up on the dailies like this, and then we violated structure to the downside, and then what we did is we made a move higher, a pullback, a move higher. So we'd retested the highs, and then we'd pulled right back again, right down into the structure level and held. So there is the potential here, because we've had a 3-point move here, even though we've retested the highs, that we could see a move higher, certainly as a minimum to this second test. Now what I'm looking at here is that we had a very deep retracement, which means there's not more selling pressure, but the sellers pushed the market all the way back down to here. So in terms of pushing it all the way back up to retest these highs might be a struggle. The safer option is to play for this secondary test right here, and you can see that we've been very, very bullish up until this point. So I'm going to leave that highlighted for now as an area where we could see the market go to. Now here on the 240, whenever I look for breakout patterns, the pole is one of the most important things, and I've been monitoring this pole and what's been happening here, and you can see it's very directional. And if we do this, you can see that we have a touch and a touch, and the question is this going to be a high and tight flag, or is it going to be a wedge pattern? And in order to do that, we do a couple of things. One is look at this candle here on the 240. It is a higher high, higher close candle, indicating here that we've held this this middle structure level and we are going higher. Let's go and take a look at it on the 60. A little bit more confirmation here on the 60, and I had the option of getting involved right here on this doji. I wasn't happy with that. We then had a higher high, higher close. I still wasn't happy because it didn't give me enough confirmation, and then what we did is we pulled back, and then right here we had another higher high, higher close above this entire area. That combined with the higher high, higher close on the 240 was enough information for me to say that I'm happy to enter this based on the pole, the higher high, the higher closes, and the fact that that we can go higher. So if I put a fib on from the start of the pole to the from the top of the pole to the bottom of where I believe the pole starts, which is for me always the rally, then we have that 127 coming into here, and you can see if I zoom out that 127 comes in at the top of our structure level, and before that psychological number 6900. So I'm very happy with that. So let's bring over the orders. Now I have put my stop a full ATR below this doji, and that simply means then that we have, in terms of risk, 39 for a reward of 44, minusing a couple of pips there, 3 pips actually, because of front running. So not the greatest reward to risk, but I wanted to wait for a little bit more confirmation for the 4-hourly candle, and then I got involved. So pretty much just a 1-to-1, but since this trade does have a very high win rate, that makes up for just a 1-to-1 reward to risk. We're back, currently 17 pips up. We're testing the highs here. Hopefully we can just carry this momentum through and rally on up to those targets. We're back, it's Monday, 8:10 in the morning, and in the night the trade has rallied up to hit that 127 fib. So very happy with that trade. Sorry about that. Very happy with that. What on earth is going on here? There we go. Start again. Very happy with that trade. Plus 44 pips for the New Zealand dollar triangle.